A better-than-expected German IFO business climate figure yesterday helped the euro extend its recent bullish trend during the European session. Higher-yielding commodities, including crude oil, were also able to benefit from risk-taking after the German indicator was released. Today, U.S. news is likely to affect market sentiment, with the unemployment claims, existing home sales and fully fed manufacturing index set to have the greatest impact. Should any of the indicators come in above expectations, the dollar may be able to reverse some of its recent losses. In the U.S., the safe haven US dollar took losses yesterday, following the release of the better-than-expected German business climate figure, which encouraged investors to shift their funds to higher-yielding assets. British pound US dollar advanced more than 30 pips during morning trading to reach as high as 1.6297, before a downward correction brought the pair to 1.6280 during the afternoon session. Against the Swiss franc, the dollar fell some 35 pips to trade as low as 0.9086. By the end of the European session, the US dollar-Swiss franc was steady at 0.9099. Today, US news is likely to have a significant impact on dollar pairs. Traders will want to pay close attention to the unemployment claims at 1:30 GMT. Followed by the existing home sales and fully fed manufacturing index at 3 p.m. While the number of people filing for first-time unemployment insurance last week is forecasted to have gone up, both the home sales and manufacturing figures are expected to show improvements in the U.S. economy. Any better-than-expected news may help the greenback reverse some of its recent losses. In Europe, the euro saw across-the-board gains yesterday, following the release of the better-than-forecasted German IFO business climate during the morning session. Against the US dollar, the common currency was able to reach a more than 8-month high at 1.3299 before a slight downward correction brought the pair to 1.3277. Euro-yen saw gains of 80 pips to peak at 112.43. Its highest levels since August of 2011. By the end of European trading, the pair was trading slightly higher than 112.00. Turning to today, euro traders will want to monitor any developments in the ongoing U.S. budget negotiations between congressional leaders and President Obama. Any signs that the U.S. will avoid the automatic tax increases and spending cuts set to take place at the beginning of the year, known as the fiscal cliff, could lead to risk